Hi everyone, welcome to Vauld's official YouTube channel. My name is Akshat Srivastav. I'm an ex-management consultant and angel investor and also a crypto investor. Through this channel, I will help you demystify the complex world of cryptocurrencies. On today's video, we are going to discuss if cryptocurrencies have any fundamental value. That is the core concept that we are going to discuss. And we are going to do that in three specific parts. First, I will help you understand in very easy to understand language what cryptocurrencies actually are. Second, I will give you specific examples of the utility of cryptocurrencies. And third and finally, I'm going to do a very quick Q&A and FAQs on the fundamental value of cryptocurrencies. So let us get the discussion started and let's first and foremost understand what cryptocurrencies are without getting into the technical details. So cryptocurrencies in its simplest form could be considered as digital assets, plural, not singular. Why? Because there are more than 10,000 cryptocurrencies and they have different functionalities associated with it. Let us try to pick an example and understand this point better. For example, if you consider something like Bitcoin, which is one of the oldest cryptocurrencies, its functionality is very different from NFTs, but they can all be lumped into cryptocurrencies and the crypto narrative. So the point is that the ecosystem of cryptocurrency is very wide and there are a range of cryptocurrencies, NFTs, metaverses and bunch of 1,000 complex things that are lumped together and are sometimes called as cryptocurrencies. Important point to understand here is this, that if you're just starting out, you need to understand the difference between good cryptocurrencies and bad cryptocurrencies. There are two key concepts that you must remember at least to build your understanding about cryptocurrencies. The first is the concept of asset class. For example, if you consider equities or bonds, these are asset classes. Similarly, cryptocurrencies are also an asset class. So that's one categorization how you can do. Second key thing that you need to remember is that cryptocurrencies are digital assets and these assets can be of various types. For example, these could be blockchain networks like Bitcoin or Ethereum. These could be metaverses. These could be non-fungible tokens. There can be side chains like Polygon, Matic. So the point is that this asset class is really wide and it comprises of good things also and it comprises of bad things also. So when you hear people making arguments that you know what, cryptocurrencies are really bad, you need to ask them the question that which specific crypto asset are they speaking about. Then only you can have a more nuanced conversation on that particular topic. So this brings us to the second part of our conversation, which is that what is the specific utility or fundamental value of cryptocurrencies. Now, to get a better understanding, we need to move not at an asset level, which is cryptocurrency level, but at the specific asset level. For example, we can have a conversation around Bitcoin, that what value does Bitcoin add? Because that is a specific cryptocurrency. Similarly, what value Ethereum, which is a specific cryptocurrency, what value does it add? So on and so forth. So let us pick this discussion and without complicating it, without getting into the technical details, let me present a basic framework to think about it. For example, if you analyze Bitcoin, now Bitcoin fosters something called a store of value. Let us understand this through an example. Right now in India, the rate of inflation is roughly 6%. If you go to your bank and if you keep your money in your bank account, you are essentially getting paid 2% on your savings bank rate. So the difference between 6%, which is the inflation rate, minus 2%, which is the savings rate, is 4%. So if you go and deposit your money in your bank account, let's say 100 rupees, then at the end of 1 year, that 100 rupee in real terms becomes 96 rupees. So currency right now in a high inflationary environment is a really bad store of wealth or a store of value. Now, if you take this argument further and ask yourself that why is it that my money keeps on getting depleted? The answer there is fairly simple, because the governments have infinite money printing power. They can turn on the printer and print more money. 2008 crisis hit, turn the printer, print money. 2020 crisis hit, turn on the printer, print money. So when I say print money, I'm just trying to simplify it. It can also mean bond operations. It simply means injecting more liquidity in the economy. That is the core concept. So anytime more quantitative easing or more money is injected into the economy, the value of the money that you're holding or saving, it goes down. So which brings us back to the story of Bitcoin, that Bitcoin actually started gaining a lot of prominence post 2008. Why the year 2008? Because 2008 was the year when quantitative easing took place. A lot of money was circulated or flushed down into the economy, which depleted the value, the real value of the cash that we were holding. Then enters Bitcoin. Bitcoin, the primary value add is that it has 21 million supply, and this supply is fixed. Now you'll say, how can I ensure that this supply is fixed? Because someone can release even more Bitcoins. So here we will have to get into a little bit of technical details that on a blockchain network, you create something called as a smart contract. A smart contract is immutable. Once the rules are fixed, it can't be changed. So if Bitcoin smart contract says that, hey, we are going to have only 21 million Bitcoins, that's it. So we are going to have 21 million Bitcoins only. And therefore, Bitcoin, due to the fact that it is not inflationary in nature, more and more Bitcoins can't be printed and released onto the network, it becomes a rare commodity very similar to gold. And therefore, Bitcoin is called as digital gold also. Now, I'll make a separate video on Bitcoin, but the primary value add of Bitcoin is that it acts as a great store of value, very similar to the way gold does. On my Bitcoin video, I will also try to compare gold versus Bitcoin. But you might ask me that there are occasions when I've heard that you can't do anything with Bitcoin. Great that my value of my money is not getting lost, but what can I do with Bitcoin? Can I go and spend it? The answer is yes, you can spend it. In fact, countries like El Salvador have made Bitcoin a legal tender. On top of that, there are more than 15,000 businesses. This includes Fortune 500 companies also that accept Bitcoin as a mode of payment. This gives Bitcoin a secondary use. That is, it can be used as a medium of exchange like real cash, and therefore, from that perspective also, it adds to the utility of Bitcoin. Now, can I give you more examples that how cryptos are useful or what is the utility of crypto? So let us pick the example of Ethereum. Now, Ethereum is a different blockchain network altogether, very different from Bitcoin. The Ethereum's utility is that it allows people to create dApps or developers to create these decentralized applications. Now, without getting into the technicalities, an easy way to understand dApps is to look at the example of fintech companies or tech-oriented companies. As an example, if I ask you what is it that PayPal does or what is it that Uber does, are they creating cars? No. Uber connects drivers with people who are seeking rides. That is a utility-based app. Same goes for PayPal. Is PayPal creating some clothes or is it creating more factories through which it is manufacturing more goods? The answer is no. PayPal, in simple words, is facilitating wire transfers. That is what it is doing. It acts as an app that facilitates transfer from person A to person B. Similarly, Ethereum allows you to build a range of dApps, decentralized application. A classic example would be Uniswap, which is based on Ethereum's protocol. What it allows you to do is that it allows you to exchange different cryptocurrencies. Similarly, there are a bunch of metaverses. I will do a separate video on that. Some of these metaverses are built on Ethereum as well. They are powering up the NFT economy. They are allowing creators, artists to monetize their skills more prominently. And there is an entire NFT movement that is taking place. But to cut the long story short and to simplify this concept for you, Ethereum, in simple words, allows you to design a range of decentralized applications that have a lot of utility. And some of these utilities, for example, Uniswap at its top was valued at roughly $22 billion. So the businesses that is being powered up by a network called as Ethereum, it is creating real businesses that are valued in billions. Now, third and final utility example that I would like to give very quickly is the concept of stable coins. Now, stable coins in very simple terms are crypto representations of certain currencies. A classic example will be USDT, which is a representation of US dollar. So, US dollar, physical world, USDT in crypto world. What does this USDT allows you to do? It allows you to do a range of different things, but one of the key things that I can speak from my own personal example is that if I transfer my friend 1000 USDT in the US, then I only have to pay $1 commission, depending on which network I'm using. But on the flip side, if I transfer my friend 1000 US dollars by using centralized banks, for example, if I'm using banks in India and banks in the US, that banking network itself will take away 4 or 5% commission. So I have a choice as a customer, whether I want to pay $1 and transfer $1,000 or pay 5% commission. So you tell me in the comment that do you see this as real utility or not? Now, a series of good cryptocurrencies, NFTs, metaverses have their own set of utilities, which I'll go in further details as we continue the series. But for the time being, you must consider reading a little bit more about Bitcoin and Ethereum because they are the ones that have pioneered the entire crypto movement, and a lot of things are being built around these two central pillars. Does it mean that I have covered all the utilities of cryptocurrencies? No, absolutely not. For example, I have not even touched about the NFT market or what gaming metaverses are. They have their own set of utilities that I will cover on future videos. This brings us to the final section of this video, which is where I will do a very brief Q&A. Now, many a times I personally get the question that XYZ investor has said that cryptocurrencies do not have any underlying fundamental business. So a parallel example can be given of a company like Uber. Now, Uber is not creating cars or manufacturing cars. It is connecting drivers with ride seekers. So that is a facilitation app. So we cannot say that Uber is not a business. Uber is an app that is facilitating a lot of convenience for people, both on the driver side and on the customer side. Similarly, Ethereum is generating a series of dApps that is creating a lot of convenience for people. So therefore, Ethereum is a network that is powering up other businesses. Ethereum in itself might not be a business. Another example that I can give you here is the concept of internet. For example, internet in itself is not a business, but internet allows you to create a range of businesses. For example, you might start your own blog or a website or a YouTube channel. But if you ask internet to show its cash flows, it can't do it. But internet has powered us to build all these different set of businesses, and that is precisely what Ethereum is doing. The second key argument that keeps on coming up is that, okay, if Bitcoin or other cryptocurrencies are so powerful, then why would a sovereign nation not ban them completely like the way China did? Now, of course, the regulations need to be understood in a more nuanced manner, but the short answer here would be this. First and foremost, the world is big enough for everyone to coexist. It's not as if that if some cryptocurrency, for example, Bitcoin gains more prominence, then people would stop using USD or INR, a bunch of other sovereign currencies. Number two, majority of the cryptocurrencies are not there to replace the existing form of currencies. They are not even trying to do that. For example, Ethereum is not even trying to replace cash in any way or form. But what about Bitcoin? Yes, Bitcoin has certain overlaps with traditional form of currencies. But having said this, Bitcoin has more in parallel with something like gold compared to sovereign currencies at play. By this logic, if we consider Bitcoin to be a competitor of cash, then we can also consider gold to be a competitor of cash to a certain extent. There will be certain overlaps between these asset classes, but this does not mean that gold one day will replace currencies or Bitcoin one day will replace currencies. Of course, as the time progresses, the asset class called as cryptocurrencies will find their own space in this world. So in summary, what did we learn today? First and foremost, cryptocurrency is an asset class and there are good parts to it and there are bad parts to it, like in any asset class. Second, good cryptocurrencies have strong fundamental value and it changes from the specific cryptocurrency that you're analyzing. Third and finally, the world is big enough for all these different asset classes to coexist, and each of these asset classes will find their own way as per the value that they are adding into the world. So I hope you enjoyed the video. Please hit the like button and subscribe to this channel, and I will see you the next time.